Trump moves to fire a Fed governor. Bonds dive, yet $455 million floods ETH ETFs and CRO rockets 50%. Panic or prime opportunity? Welcome to your daily 5-minute crypto brief with Satoshi and Nova. Today is August 28th, 2025. I am Nova.
I am Satoshi. Bitcoin edged up maybe 1.3%, sitting near $113,000. Solana actually did better, jumped about 3.8% to $212. But Ethereum pulled back slightly, down about 1.2%, around $4,570. Looks like some profit taking there.
Yeah, seems like it. And meme coins were, well, pretty quiet overall.
Right. But the really big story, the one causing ripples beyond crypto, is this clash between the White House and the U.S. Federal Reserve. President Trump trying to fire Fed Governor Lisa Cook. That definitely spooked the markets. You saw that risk-off feeling kick in initially.
Oh, absolutely. And what's fascinating is how fast that hit the traditional markets. Bonds, currencies. Investors just, well, they dived into safe havens. Treasury bonds, we saw the 2-year Treasury yield drop pretty sharply, about 4 basis points down to around 3.69%.
Okay.
And the U.S. dollar weakened too by about 0.3%. And usually, you know, a weaker dollar, lower yields, that can be good for risk assets like crypto.
Right. Makes them relatively more attractive.
Exactly. But this time, the sheer uncertainty around the Fed itself kind of put a damper on things. Traders stayed cautious.
So politics definitely casting a shadow. But, okay, amidst all that nervousness, there was a massive bright spot for Ethereum, wasn't there? U.S. spot Ether ETFs. They saw, what, $455 million in net inflows just on Tuesday.
Staggering amount, yeah.
I mean, that's huge compared to Bitcoin funds the same day. More than 5 times the inflow. Bitcoin funds only got around $88 million.
It really puts it in perspective. And you saw BlackRock's ETH, Fidelity's HEF. They were leading that charge.
So what does that signal, really?
Well, connecting this to the bigger picture, it's just clear evidence of growing institutional appetite for ETH. It's not just speculation anymore. Analysts point to things like, you know, the staking yields you can get, plus more companies potentially adding ETH to their treasuries. It's a really significant bullish structural sign for Ethereum long-term, I think. Shows a belief in its actual use case.
Okay, so steady institutional flow on one hand, and then absolute fireworks on the other. Let's talk altcoins. Crypto.com's Kronos, CRO. It just exploded, didn't it? Up nearly 50%. In just hours.
Yeah, that was pretty dramatic.
And the trigger was that news, right? The massive, like $6.4 billion partnership with Trump Media and Technology Group. They're forming a CRO treasury.
That's the news that broke. And the market reaction was, well, undeniably positive, at least initially. But, you know, moves like that so big, so fast, they often attract profit takers pretty quickly.
True. The initial pop isn't the whole story.
Exactly. And the deal's real success, you know, it's going to depend on whether people actually start using CRO more because of this, how those funds are actually deployed. So, yeah, maybe a bit of caution is warranted after such a huge spike.
Got it. Okay, shifting gears slightly, what's happening with Tron, TRX? There's talk of a big fee change.
Yeah, they're looking at a proposal to cut transaction fees pretty substantially, like halving them, roughly, from 210 Sun down to 100 Sun.
And the aim there is just more activity.
Basically, yeah. They hope it'll boost user activity by maybe 45%, make it cheaper for things like stablecoin transfers, which Tron is used for a lot.
Makes sense. Any downside?
Well, there's a potential trade-off. If you reduce the fees, you also reduce the amount of TRX that gets burned or destroyed with each transaction. So if network usage doesn't increase enough to offset that lower burn rate, you could actually end up with a slight increase in the total TRX supply. Mild inflation, basically.
Interesting. Something to watch. Okay, and one last piece of news, regulation, and oversight. The CFTC made a move.
That's right. The CFTC, the commodities regulator in the U.S., they've adopted Nasdaq's market surveillance platform.
Nasdaq's tech. So like the same kind of tools used for stocks.
Pretty much. Advanced stuff. The idea is to get better at monitoring crypto trading activities, spotting manipulation, fraud, that kind of thing.
So bringing more traditional market oversight tools into crypto.
Exactly. It signals, you know, a higher level of scrutiny, makes it harder for bad actors, and really reflects the whole industry growing up, becoming more mature.
Okay, wow. So quite a 24 hours. Politics, huge institutional moves, specific coin explosions, regulatory steps.
Yeah, it really covers the spectrum.
Yeah.
So what does this all mean for you, the listener? I think the past day really underscores this constant interplay, doesn't it? You've got global politics impacting sentiment, you have huge institutional capital making decisive moves, and then these very specific, sometimes wild, developments within crypto itself. It's incredibly dynamic.
Absolutely. And for you, the takeaway seems clear. Yes, there are big opportunities to look at those ETF flows or that CRO surge. But that political uncertainty we talked about, the evolving regulations, it just means staying sharp, staying informed, and really sticking to disciplined risk management is, well, more vital than ever.
Couldn't agree more. And maybe a final thought to leave you with. As the world gets more connected, more complex, how do you think global political stability or maybe instability is going to keep shaping decentralized finance? And what could that mean for your own long-term strategy in this space? Something to ponder.
You've seen the crypto headlines. Now get the signals that impact your holdings. Money.ai scans 1.3 million signals a day, from token prices to Twitter sentiment, and gives you one personalized briefing. No hype, no noise, just your crypto edge. Download Money.ai. Stay ahead.